Good afternoon, everybody. I welcome you all to the second webinar organized as part of the research debate series introduced last year by the Euro-Mediterranean Economists Association in collaboration with the Euro-Mediterranean Network for Economic Studies, EMENES, which is being rebranded as the Euro-Mediterranean and Africa Network for Economic Studies, EMANES. Now, the second webinar of the series will present the result of the study on financial inclusion in the Southern and Eastern Mediterranean countries, based on a survey for 5 countries, mainly Egypt, Jordan, Lebanon, Morocco, and Tunisia. And this survey has been conducted prior to COVID-19, and also we try to update the research during the COVID-19 period. Financial inclusion has been extremely important on the policy agendas of policymakers in these countries, but also in international organizations, regional and international regulatory authorities. And then it became really a pillar for resilience during and hopefully post-COVID-19 pandemic. Financial inclusion, and in particular via digital platforms, and has been really very much essential to reach out people, particularly the segments of individuals and MSMEs that have more difficulties sometimes to access finance, particularly in developing countries. Now, if we look at the literature, it is well demonstrated by now that financial access enhances financial development and economic growth. However, today there are new challenges connected, for example, to digital connectivity, financial literacy and education, and security-related matters, for example, the ones that are linked to cybersecurity and also linked to anti-money laundering and terrorist financing. So the conditions for financial inclusion to contribute to financial stability, sustainability, and resilience must be identified and dealt with to ensure that financial inclusion, as we want it, of course, in terms of its objectives, tools, and mechanisms, can achieve its maximum potential for individuals and MSMEs, but also to reach out the vulnerable population, for example, the aged population, and also the migrants and other types who have much more vulnerabilities nowadays. Now, the evidence shows that the countries in the South and East Mediterranean, which is the focus of our study, are still lagging behind in terms of financial inclusion, both at individual and also company levels. Now, if we look at the region, we can see a significant gender gap, age gap, also urban and rural gap. There is still a digital divide, very high levels of informality, and of course, very low access to financial services to young people. So I'm very pleased that today we are discussing the finding of this EMEA and EMANES study on financial inclusion. So in this study, as I mentioned, what we try to do is to provide a comprehensive analysis on the state of financial inclusion in 5 countries I mentioned, Egypt, Jordan, Lebanon, Morocco, and Tunisia. And our research obviously will continue on this topic to ensure that financial inclusion continue to be a pillar for recovery post-COVID-19 and also for sustainability aligned with the Paris Agreement agenda. So without further ado, I would like to give the floor to my colleague, Mais Shaban, who is a research fellow at EMEA and EMANES. And then Mais, I hand over to you to moderate the research debate. Thank you very much.
Many thanks, Reem. Let me welcome you again to this second webinar of the EMEA and EMANES research debate series. So as Reem mentioned, the webinar will present the results of the financial inclusion in the southern and eastern Mediterranean countries, covering Egypt, Jordan, Lebanon, Morocco, and Tunisia. I would like to start with a brief on the regional context. Already mentioned by Reem, financial inclusion is a priority for the region due to its important role in fostering sustainable development. And of course, countries in the region are still lagging behind, and a significant gender gap, urban-rural gap, low financial inclusion for youth is evident in the region. So the results of this study show that the surveyed countries have several features in common, including low access to finance in rural areas, the use of informal financial services, commercial banks being the main providers of services, high cost of lending, MSMEs and startups have limited access to finance. However, the efforts to enhance financial inclusion had or resulted in improvements in recent years, and this is particularly due to government initiatives, usually led by central banks in these countries, where they utilize guarantee schemes, digital services, and other players are also emerging in the region, including postal offices and microfinance institutions. So the study shows that the identified barriers to financial inclusion include financial illiteracy, insufficiency of funds, high collateral requirements, and lack of trust, in addition to high costs of financial services, limited branch networks, and lack of data on individuals and MSMEs. In the context of COVID, financial inclusion, and in particular digital financial services, has been a key pillar of resilience during the crisis. It has played a vital role in facilitating the reach to vulnerable groups. So countries in the region utilized a number of financial inclusion tools to ease the impact of the pandemic. And this included digital wallets, developing e-banking services, utilizing credit guarantees, and simplifying KYC regulations. So in this EMEA EMANES webinar, our three panelists, who are researchers and experts, will discuss in depth the state of financial inclusion in the surveyed countries, the barriers to achieving financial inclusion, the regulatory framework, and policies used to promote financial inclusion in each country, in addition to the challenges and opportunities brought by COVID. So let me start. I would like to welcome all the panelists, discussants, and attendees. We start with Dr. Sandra Shalita, Assistant Professor at Estes Business School in Lyon, Research Fellow at EMEA and EMANES Coordinator. She will present to us the case of Egypt and Lebanon. Sandra, the floor is yours. You have 15 minutes.
Thank you very much, Mais. I can now share my screen. So, thank you very much for this session. I will present the results of the Financial Inclusion Survey in Egypt and in Lebanon. The survey in Egypt was led by Ali Al-Mahdi and Taghreed Hasouba from FABS Cairo University during the EMNES program. And basically in Egypt, the financial inclusion policy is handled by the Central Bank of Egypt. And it was chosen as a model country in the financial inclusion global initiatives in the World Bank because Egypt has a high potential of attracting new clients for financial inclusion. So regarding the policies to promote financial inclusion and the regulatory framework in Egypt, the Central Bank of Egypt has launched several initiatives in order to improve financial inclusion, such as mobile payment services regulation. They regulated these services and enabling digital payment. They opened new bank branches by reducing the required capital to open a new branch for banks. They regulated also the online banking. They funded the marginalized population. Especially, they had an initiative to finance middle and low income population at low interest rates for mortgage financing. They established also the financial inclusion unit at the central bank, and also to do a strategy with the Egyptian Banking Institute for National Strategy for Financial Literacy. Also, other initiatives are regarding to support MSME financing by imposing a minimum requirement of 20% of banks' loan portfolio to be targeting MSMEs, and to impose on banks to create special unit for financial services for enterprises. Other initiatives that are not led by the central bank are Aman initiative to target the poor, women, startups, and youth. Other financial literacy projects that are led by commercial bank. It was also the same case in Lebanon. A lot of initiatives for financial literacy were launched by banks, and financial regulatory authority supporting also the microfinance institutions. Regarding the salient feature of financial inclusion in Egypt, basically, all of the numbers in Egypt were progressing. So there is more and more financial inclusion in account penetration, in mobile banking. At all levels, there is an increase in the availability of financial services, also in the access of financial services in Egypt, of the use also of financial services. And however, there are some barriers that are observed in the Egyptian market to financial inclusion. These barriers, we try to put them into two categories, on the supply side and demand side. So on the supply side, there's low efficiency of financial institutions in Egypt, limited branch network, which is now expanding, but it was limited, and lack of data regarding financial inclusion, so limiting the policy-making measures that could be done. On the demand side, there is a lack of trust in financial institutions that is obvious in Egypt, and low level of use of financial services, so people consider that they don't need them. With high levels of informality, Egypt has a high level of informality in business, so it also relates to financial services and also financial illiteracy. So some measures to promote financial inclusions, they are basically, they aim to have different programs. So the measures based on different programs to widen the scope of financial inclusion and cashless transaction. For example, launching new financial services provider, allowing a better financial inclusion by providing access to new type of financial services, enabling easy and quick transfer of funds and remittances. So the role of mobile banking is very important, and providing microfinance loans to SMEs. Also, there's a lot of initiatives on financial literacy, such as the National Strategy of Financial Literacy launched by the EBI with different stakeholders, a lot of awareness campaign and targeting of rural areas. And also one of the measures can be also the development of Islamic banks, because a lot of people exclude themselves from the financial services for religious beliefs. So Islamic banks can also contribute to financial inclusion. Some policy recommendations. So there is a national strategy for financial inclusion, but there is a rapid need to better design it and implement it. To also support low-income and marginalized population, there is a need to improve the level of access and literacy with a multi-stakeholder approach. It's not the job only of the central bank, but different stakeholders from the customers to the bank to the government. Also, the need for legislation to restrict social barriers, especially for women and youth, and creation of collateral registry and credit bureaus. Regarding the support of the private sector, there is a need to develop financial infrastructure to support the private sector in innovation and the development of MFIs, microfinancial institutions. Regarding the digitalization, as Mais just mentioned, the COVID-19 was a unique opportunity to improve the digitalization in the financial services. And for Egypt, it's important to emphasize on the digital finance and payment system, financial innovation and understanding the risks, so regulate them, but at the same time encourage them, and improvement of bank efficiency. And also the international organization and the EU are launching a lot of initiatives, so it's important to benefit from the support of these organizations for better financial inclusion. Regarding the case of Lebanon, it is important to note that this chapter was drafted before, so the survey was done before the Lebanese crisis. So, in my talk, I will talk about the case of Lebanon before the crisis, and then I will highlight some points on the impact of the crisis on financial inclusion in Lebanon. So Lebanon currently is facing one of its most severe crises in its history, and with multiple crises, and it has a huge impact on financial inclusion, on the trust on banks, because the crisis has different aspects: monetary, banking, economic, health, and social crisis. So I will discuss a little bit the case of Lebanon. Just a few key elements. Lebanon was considered advanced in financial inclusion and in his region and in his income group. So there were not big problems for financial inclusion in Lebanon. However, a lot of initiatives were launched for better financial inclusion. For example, for MSMEs, there is the policy was not to have not to regulate a lot the market, but to promote some counter-distortion tools to reduce the market inefficiencies. So there were small initiatives rather than a global strategy for MSMEs. However, there was guarantee schemes that were led by Kafalat supporting MSMEs and providing them lending loans at lower interest rates. Also another important initiative was to launch the 331 circular, which was a circular to improve the startup ecosystem in Lebanon by providing credit facilities for startups, accelerators, and credit venturing. And it was quite a promising area for Lebanon. Regarding the households, there was a launch of a national strategy for financial inclusion led by the central bank. And the MFIs were in competition in Lebanon between each other, and they are comprised in two groups: the regulated MFIs and some NGOs acting like MFIs. So it was quite complicated to deal with these MFIs. Therefore, they created the Lebanese Association of Microfinancial Institutions to try to make them work together. It was a platform where they can work together into data sharing, to share their data on their microfinance portfolios. So as I said, the financial inclusion was not a problem for Lebanon. The access to finance was relatively, the country is small as compared to Egypt. Geographically, the country is small, so to access to financial institutions, it's easier. And the market is dominated by commercial banks. There is a very few other type of financial institution. There is also the OMT, which is a money transfer program that was playing a role into financial inclusion. And now after the crisis, it's playing a major role into accessing at least remittances. The MFIs represent a small share of the financing. And there were, when the refugee crisis in Syria hit, and the crisis in Syria hit, a lot of Syrian refugees were in Lebanon. So a lot of international initiatives were launched to support the MFI to support refugees by providing microloans. So as I said, the access for financial services was quite high. And in Lebanon, we had one of the highest level of deposits to the GDP. The size of the banking sector was very big as compared to the Lebanese economy. And this can be explained by the fact that the banks were suggesting very high interest rates on deposits, encouraging the Lebanese diaspora to remit to Lebanon. So more than 13% of the Lebanese GDP was remittances, and these remittances were deposited in the bank at high interest rates. Also, there was high access for urban and rural areas, so people have access to financial institutions, and bank branches were widespread in the territory, and the MFIs were strongly represented in rural areas. Regarding the use of financial services, the savings account and borrowing account were used. More than 20% of the population saved money in banks and borrowed, 70% borrowed from banks. And basically, one of the key roles of the banks were to receive the remittances and the money from the diaspora. The mobile banking was non-existent. If you want to use the mobile banking, basically is to consult your account, but you cannot do any money transfer. And enterprises used bank for financial service provider to finance investment. So basically, since it's the commercial banks are the major financial, major and basically only financial service provider, companies used to go to take loans from the bank. So the barrier for financial inclusion, as I said, these are data from the 2017 Fintech, is that one of the biggest barrier of financial inclusion is insufficient funds. So people, they had high trust, they had trust in banks. Only 10% said that the reason of not having a bank account is lack of trust in financial institutions. It's very interesting to see the results of the survey, the new results after the crisis of the survey, because now the population does not have to have trust at all in financial in financial services providers. So other reason is the lack of necessary documentation, especially when you have the case of refugees, also the Palestinian refugees. It can be a barrier to access to financial institutions. So the measures to promote financial inclusion, it was not a priority for the central bank, and they put a national strategy for financial inclusion unit in order to improve access to finance and investment, enhance financial capabilities, and focus on consumer protection, and also other financial literacy initiatives led by banks and NGOs. But as I said, even when we did the survey, it was not the major problem for banks to have financial inclusion, but basically is to try to see how to avoid the crisis. And the crisis hit starting October 2019. The crisis was a banking crisis, a currency crisis, and an economic crisis. The COVID-19 came afterwards. And unfortunately, as compared to the other countries, the COVID-19 was an opportunity to have better digital financing. It was not the case in Lebanon. So as we can see, I try to see the latest numbers from the IMF on the depositors. We have less depositors in central banks. There is, as you can see, also a sharp decrease in the amount and the value of deposits, a sharp decrease also on the loans. With the devaluation crisis, the loans on that were took by in LBP were paid back anyway, because they became very cheap with a loss of the currency value of more than 90% of its original value. So what happened, the impact of the crisis on the financial services and on the banking sector and financial inclusion is a sharp reduction of the banking size sector in Lebanon. And there is a need to restructure the banking sector. Now more and more branches are closing to reduce the costs. There is also a huge brain drain in the sector. It was one of the most important sector in terms of employability in Lebanon, the banking sector and the insurance sector. And now the bankers are leaving the country. Also, the trust sector was lost, loss of financial capabilities. The remittances, the diaspora will never ever send again money to remit to put money in the bank, because they lost their money now in the local banks. Now the economy, the huge advantage, the huge advances in mobile and in payment services. Now it's back to zero. We are returning to a cash economy. And also the image of the banks with the Ponzi scheme revealed that the banks were giving the loans to the state at huge interest rates, and it made the image also of the banks very bad. So it's a big barrier to go back to financial institutions, to banks, at least in Lebanon. Also, the governor of central bank is under examination in several countries. He's pursued by different European countries. And also on the microfinancial institutions, more and more scandals are hitting on the problems of governance of these institutions and their involvement in some political movements. Some policy recommendations after this crisis: for better financial inclusion, it's important to regain trust. Some alternative financial services are appearing. They need to be empowered to have a more diverse financial sector. Some cooperative banks initiatives are launched, but as we know, it's important to regulate them in order to not to have another crisis due to alternative financial services providers. And so, as I said, it's important to regulate them. Empower the role of money transfer applications at a cheaper price. Restructure of the banking sector, and law enforcement and accountability of the people responsible of this crisis. To support MSMEs, keep encouraging the guarantee schemes and collaboration with the international community for funding. Several initiatives were launched to support some industrial sector to give them loans at lower rates, given the currency devaluation and the difficulty to import. The role of the EU is important, especially in Lebanon, in funding and also in assistance for restructuring of the sector. Thank you.
Thank you, Sandra. Very interesting, actually, to see the impact of the Lebanese crisis, not only COVID. You have variety of crisis in Lebanon. So it's very interesting to see the impact on financial inclusion. We will be back to questions and answers after all the presentations in the end. So I'd like to move to the case of Tunisia and Morocco, presented by Dr. Yagani Faraj-Far, researcher at EMEA. Yagani, the floor is yours. You have about 15 minutes.
Thank you very much. Let me share my screen. Okay, that should be good. I'm going to present the results of this study on financial inclusion in Tunisia and Morocco. So as an introduction, in Morocco, we observed that in spite of major reforms since 2002 to enhance financial inclusion, financial exclusion remains very pervasive, and concerns mainly low-income households, women, and less educated, and those living in rural areas. And also the highest rates of microcredits we have in Morocco compared to other regions, other countries in the MENA region. And the sector went through in 2008 into a big crisis, led to major reforms for the microfinancial institutions. And there has been other reforms since 2002 to enhance financial sector and financial inclusion. In the case of Tunisia, Tunisia ranks low in terms of financial inclusion compared to other MENA countries. We can divide Tunisia into interior regions and coastal zones. Within the interior regions, financial inclusion exclusion is very high, and mostly we have post offices and microcredit institutions or associations who are very dominant in the financial sector. In the coastal zones, on the other hand, we have a big bank concentration because of the concentration of large businesses in these areas. So financial exclusion is less pervasive than interior regions. And government has initiated a national strategy for financial inclusion. So we're going to see more about that in the rest of the presentation. Okay. And the main outline of my presentation would be, first of all, we're going to see national policies to enhance financial inclusion. Then we're going to observe regulatory framework, and then the salient features of the financial inclusion in countries with availability, access, use, and barriers for financial inclusion. And last but not least, we're going to see the measures to promote financial inclusion, both in Morocco and Tunisia. So the first part is about financial inclusion in Morocco, and the main contributors to this part of the study are Najat El-Mekawi, Sarah Lukili, and myself. The main national policies to promote financial inclusion in Morocco are, first of all, the National Financial Inclusion Strategy, SNIF, which was established in 2016 by the Ministry of Economy and Finance, and Bank al-Maghreb, which is the central bank of Morocco, and they had the three main objectives of this strategy. First of all, to achieve and exceed the target penetration level of financial services, to reduce inclusion gaps, and also to make financial inclusion a leverage for economic and social inclusion. There are several policies supported to support SMEs financing and access of small enterprises to finance. The first one is Innovinvest Fund, which was launched by the government in 2016 as well. And the goal was to support startups, and their budget is over 500 million dirhams. And the charters to promote and strengthening the interventions of business angels to finance startups. There was another law, the law of number 1518 on crowdfunding, which was adopted in 2021. So it is pretty recent. The country is moving towards adopting new modes of financing. And there is Intiliaka Fund program, which is also targets small and medium-sized enterprises and startups. And there are a number of guarantee schemes and guarantee funds. So within the study, you can have a list of them, and it's and more detailed information on all of these initiatives and policies. There are a number of policies supporting access to housing for low-income households. So first of all, is a policy targeting to reduce fees for basic accounts. So low-income households can access financial services. Second of all is the National Financial Education Strategy launched by the Bank al-Maghreb. And the third one is providing guarantees and microloans for housing. So the idea is to increase demand. And at the same time, we're having tax breaks and subsidies to developers of houses. And that also is to promote the supply side. and making affordable houses available. Regarding the regulatory framework in Morocco, there is three main pillars. The first one is a general legal and regulatory framework to extend the range of financial services. The second pillar is the regulations for non-bank financial institutions. And the third one is the regulation for consumer protection. So again, in the study, it is all detailed, all of the frameworks. And I would also like to highlight that there were a series of reforms in the microcredit sector since the 2007 and 2008 crisis, because there was a massive problem within the microfinancial institutions that are very strong in Morocco. And these reforms moved in the direction of raising transparency and also collaboration among actors, because the main trigger of the crisis was over-indebtedness and giving multiple loans to individuals. But we are going to see that in a while as well. I move to the next part regarding salient features of financial inclusion in Morocco, and we're going to see the availability, access, use, and also barriers for financial inclusion. So let's start with the availability. So the sector is the financial sector in Morocco is bank-based majorly. So banks are the main providers of financial services. As we can see in this figure, the number of banks branches in the country has risen over the years. Also, the number of ATMs has increased as well. In terms of availability, the sector is growing, but not that fast. The second point is on for availability of microfinance institutions. As I said earlier, we have the highest rate of microcredit access in Morocco compared to any other country in MENA region. And so this is due to the early success and impressive growth of the microfinance institutions between 2002 to 2008. And in 2008, there was a big crisis in the sector with the bankruptcy of the foundation Zakura, which is the second biggest microfinancial institution at the time. And so the government saw a solution, and the foundation Zakura was absorbed by Banque Populaire, which is now called Atawik. And so to avoid higher costs to the economy. But then that led to a series of reforms for microfinance financial institutions, as I said, to enhance transparency and also the data sharing between other institutions. So, but the microfinancial institutions remain very concentrated, with 2 out of 13 institutions in Morocco holding 90% of market share. So we have high concentration here. And the third big institution providing financial services is the postal network. So Moroccan Postal Bank, which is called Albarid Bank. It was transitioned to a commercial bank in 2009 to enhance financial inclusion in rural areas. By the end of 2014, it represented 31% of all bank accounts. So it is very successful, and it reached a lot of people. And the particularity of the Bank Albarid is that it can grant housing loans, which is not all the time the case of postal banks, but it is forbidden by the central bank to provide other types of loans. So basically, it is in line with the initiative to help poor households to obtain housing. The fourth institutions is mobile banking. So they have great potential in Morocco. There is a great potential for mobile banking because of a number of reasons. First of all, widespread mobile penetration. low level of bank people, and also relatively favorable regulatory framework, and also high levels of remittances. It is shown in the literature that when the remittance level is very high, there is a high potential for mobile banking. And in Morocco, it's like over 6% of GDP, so that it is quite significant. And this high potential was brought up to attention by a special committee in 2018 with the central bank and another authority to, and the government adopted tax incentives relating to a reduction of 20% of the annual turnover achieved via mobile payments. So there is incentives created to move people to use mobile banking. And regarding access, we have factors affecting access to financial services are basically gender. So women are less likely to access financial services. The working status, those who unemployed people are less likely to have a bank account or access to financial institution. Educational attainment, so higher educated people have higher probability of having a bank account and accessing financial services, and also place of residence. There is this rural and urban divide all over the region. And also regarding the access of the enterprises and firms to financial services, there is 69% of firms declare not having a line of credit or loan. So it means that and the main reasons of that is because of unfavorable interest rates and also complex application procedures and high collateral requirements that limits access of firms to loans and credit. In terms of use, we can see that bank deposits and credits have increased over the past decades. The major source for SME financing are banks. There are also informal savings and credit institutions and people who are very active in Morocco. There is a survey launched by the Central Bank and the World Bank in 2014, and they show that informality is very high in the financial sector. Like 33% of the households save at home, and even 14% of them report having credit in self-help organizations and so on, so informal as well. And there are other numbers in the study, so you can see it is very prevalent. In terms of barriers, we have divided them into demand side and on supply side barriers. On the demand side, there are cultural factors regarding, for instance, women are less likely to have property in their name or registered by their name, so they have a less possibility to afford a loan because they cannot provide the collateral. For things like that, and also people's reluctance in terms of putting their money in a bank and receive an interest rate. Also, there is financial literacy as a problem. There's also mistrust towards financial institutions and lack of funds. It is the first reason that people bring up when they are asked why you don't have a bank account. And in terms of on the supply side, we have infrastructure. So there is like not enough bank branches still, although there has been a lot of progress in this term. There are high costs, and also in terms of human capital, the people who are working in the financial sector, they do not, they're not up to the standards, all of them. So we have this lack. In terms of measures to promote financial inclusion, the government has signed the Maya declarations. So there are different pillars to this to enhance financial inclusion and also financial literacy. There is also financial inclusion policies through new technologies. So the Moroccan Capital Market Authority made a commitment to adopt regulations favorable to innovation within its 2021-2023 strategic plan. So which is like favorable to crowdfunding. The law was adopted in 2021. And so they are a new and also aiming to broaden the range of Sharia compliant instruments to different market segments. The other measure is to sustaining policy benefits for future generations, so through financial education by the Moroccan Foundation of Financial Education, or FMEF. Okay, for the second part of my presentation, actually the focus is on Tunisia. So the main authors of this part of the study are Olfa Benouda, Sumaya Ben Khalifa, Dora Hamid, and Rania Makni. So we follow the same structure. We start with the national policies to promote financial inclusion. So the Tunisian Ministry of Finance set up a strategy for developing microfinance for 2011-2015. And there is a setting up the Authority of Supervision of Microfinance, or Autorité de Contrôle de la Microfinance. And within this framework, we also had the setup of the Central Risk Unit, or Central de Risque. And as a result, we had 350 microcredit points of service being accessible in 2013. In 2016, the Ministry of Finance adopted a comprehensive strategy for responsible financial inclusion. Within the regulatory framework, there are a number of laws, and each of them, we have an institution developed based on that. So in 1997, the Tunisian Ministry of Finance created a public financial institution, Banque Tunisienne de Solidarité. In 1999, there was the first law on microcredit was approved by the Tunisian government. In 2005, we had the Tunisian government created the Bank for Funding SMEs and Banque de Financement des Petites et Moyennes Entreprises. And in 2011, we had the government provided the framework for the creation of the Microfinance Supervisory Authority, Autorité de Contrôle de la Microfinance, as I said earlier. And in 2016, we had the broadening of the scope of activities of the Banking Services Observatory, or Observatoire des Services Bancaires. And also we had two guarantee funds in Tunisia, FNG, Fonds National de Garantie, and also SO So these are the schemes. And regarding the salient features, so first of all, we start with the availability in terms of bank branches. We see that there has been an increase over time. So the banks are more and more accessible. We have also have the numbers of ATMs and other indicators in the study. Regarding the postal network, post offices are very accessible to people. So 80% of surveyed people declare that they have a post office within a walking distance. And they offer a number of financial services such as savings, transfer, payments of bill, etc. But they don't give loans. By the end of 2015, the number of post offices was about 20 offices per 100,000 adults, representing 42% of the total financial services outlets. So they are very present on the financial sector. And they have a permanent consumer base of nearly 6 million people and 7% of Tunisian population.
Yeah, Gani, sorry to interrupt. If you can
move faster. Okay, yeah.
Yeah.
Okay, I have 3 minutes. Good. So microfinancial institutions, They are also very present as the law pushed for them. And we have 6 limited liability companies who have 80% of shares. In terms of access, 37 of adults have a bank account. They declare having a bank account in 2015. And we have higher exclusion in rural areas. And 2% of adults who hold a mobile money account in 2015. So mobile money is not very pervasive. And 90% of Tunisians have formal account in a postal network, but half of them don't use it. So they were inactive for at least 2 years. And 29% of enterprises or MSMEs have never attempted to open a bank account. So small and medium-sized enterprises are somehow excluded. Informality is prevalent, like the case of Morocco. 39% declare saving money, but only 18% have saved in a financial account. In terms of use, also 54% of adults do not report receiving wages in a financial institution account in 2017. And but a lot of SMEs, they have an account in a formal financial institution. But only half of them have an outstanding loan or line of credit. And the use of digital finance is very limited. In terms of barriers, they are mainly related to financial literacy and access to financial services, and also affordability, as the collateral is very high and the interest rates are high. At the terms of enterprises, the collateral is the biggest barrier. So there are different measures to promote financial inclusion in terms of the regulatory framework. There was a framework to set up the development of microfinancial institutions, and it was successful. Yes, and the main axis pillars for the national strategy for financial inclusion. The most recent strategy is the digital finance, microfinancial institutions, refinancing, and also the social and solidarity economy, and also financial education. So these pillars are receiving extra focus. And in terms of different measures to promote financial inclusions, we have different programs. And also MDNR, which is a mobile phone services, and adopted, and different initiatives to promote financial literacy. So I conclude, this is a wrap up, my final slide. So in Morocco, the COVID-19 crisis has access to put the access to financial services at the heart of the most mitigation measures. So now financial inclusion and debate on how to enhance it is at the heart of all of the mitigation plans. There is disparities between rural and urban areas, between men and women, and between stable and not inconsistent income population. And there have been important measures taken to progress of the infrastructure, and also to provide access and enhance financial literacy. In Tunisia, financial inclusion is very low compared to other countries in the region, and compared to low income countries. Concentration is in urban areas. The Post is making a lot of effort to reach excluded people. And there is a national strategy that has been adopted in 2018 to 2022. And the low use of financial services in Tunisia requires better communication and education of clients. So thank you very much. Sorry, I was a bit over time.
Thank you, Yagane. Very comprehensive overview of the case of Morocco and Tunisia. We come back to you with the questions in the end. So let's move to the case of Jordan. I would like to invite Dr. Serena Sandri, Associate Professor at the School of Management and Logistic Sciences at the German Jordanian University. Serena, the floor is yours. You have 10 minutes.
Thank you very much, dear Mais, for the introduction and for the moderation, and thanks for the colleagues for their very interesting presentations. And also for, I mean, it was very nice to work together at this study, at this financial inclusion survey. Let me then share with you my screen. Okay. Sorry, here it is. Okay. Can you see my presentation? Sorry.
It's
just a bit slow. Let me. Is it working now?
Yes.
Okay, sorry, that was just a little bit a slow connection. Great. So I'm going to talk about some main findings of about financial inclusion in Jordan based on the results from our survey. The survey, I mean, I was part of a team together with Dr. Noah Shiyab and Dr. Dima Daravke. Yes, in general, in general, Jordan has just some main features just to understand how is the situation in Jordan. Jordan has for sure a well-developed and sound banking sector, a very active microfinance scene, and also, I mean, a well-developed alternative markets for finance in the sense mostly of Islamic banking. From the point of view of regulation, also the whole banking and financial sector is well regulated in the sense that the Central Bank of Jordan is the only authority that is in charge of regulating the whole sector, including the microfinance institutions. Much effort has been put into promoting financial inclusion. So financial inclusion is for sure a very important area of policy intervention. This started with the launch of the National Strategy for Financial Inclusion, 2016-2017. It continues now for some follow-up and some action plans. I will be talking about it in a short time. As a result, in general, of the whole efforts that authorities are putting into supporting financial inclusion, the share of adults holding the bank account has been progressively increasing over time. So we started from less than 25% in 2014 to reach 50% of adults holding a bank account in 2020. So that's something good. I mean, for sure, efforts is praised. Still, there are some barriers to financial inclusions, and out of reviewing them, we will also develop some more focused policy recommendations. The gender gap has been decreasing also over time, but is still existing. So we will be also discussing about it. In general, just to provide a very, yes, a sort of evaluation about financial inclusion in Jordan. My co-authors and I, we also calculated the index of financial inclusion based on SARMA methodology. And the result is that in general, Jordan has an intermediate level of financial inclusion. Okay. Now, I just like to review some most important indicators, and then we will comment what could be important in yes, what could be possible policy implications. How is the situation with financial inclusion in the country? In general, as we said, that the banking sector is sound, solid, and well developed. And the share of deposit in terms of GDP is also pretty high. Well, not as high as we saw in Lebanon, but still, I mean, in 2020, the deposits represented 119% of GDP. 83% of GDP was represented by deposits of households only. So, I mean, these in general, I believe, reflects the overall trust of the people into the banking sector, which is for sure a good basis also to work with to promote financial inclusion. Banking density, I mean, if we look at the number of commercial bank branches per 1,000 square kilometers, we see that in general, the number of bank branches has been increasing over time, slowly but progressively increasing. Whereas if you want to see the number of commercial bank branches per population has been slightly decreasing. we need to consider this finding a little bit in a relative term, because I mean, also population has been increasing at a very high rate in Jordan. So in general, I believe, I mean, it's not such a negative picture that we can get out of it. This is also corroborated by the fact that the number of ATMs, both per 100,000 adults and per 1,000 square kilometers, has been increasing over time. So these reflect in general that the accessibility of financial services has been increasing over time. Okay. Now, looking a little, yes, trying to reflect a little bit more about still the gaps that are existing and those barriers and groups that are a bit, that are less included, okay, in the use of financial services, we see that there is still a significant income gap. It has been also decreasing over time, okay, but we could see that, I mean, based on the Findex database results in 2017, still the richest 60% of the population had basically, I mean, almost half of them had a bank account, whereas only 33%, so only 1/3 of the poorest sectors of the population still were in possess of an income, of an account at a banking institution. Sorry, okay, I didn't want to continue, but it's fine. Significant are also gender differences in the ownership of a bank account. Again, the gap has been somehow decreasing over time, but still it is significant, and it is also larger than the average gender gap in account ownership. So, I mean, this for sure, it's something that requires action. In general, I would say that our authorities are aware of the need to support females in having their own bank account. They are also aware of the need of supporting the accessibility of loans by females, because this is still representing an issue for the country. Oops, sorry. And then a fact that I didn't present it in the slides, but still it's worth to be mentioned, is that there is also a significant age gap in account ownership. So we can see that actually the share of bank accounts held by people, but by the youngest, I mean less than 25 years of age, it's much less than by elderly segments of the population. These can be also related to the high youth unemployment. So in general, this is also something where we need to put some effort, and I mean, we can derive some policy recommendations. So for sure, females are still somehow marginalized by the access to financial services and the youth. Okay. So now here it's just a little bit the most recent developments in regard to the digital payment systems, because also the digital payment systems are a pretty recent development in Jordan, and there is still the need actually to yes, to expand them, to improve them, to make them more pervasive throughout the society. So in general, we see that over the last year, it's over, I mean, between 2018 and 2020, there has been an increase in the number of licensed payment systems providers. Also that the number of agents have been increasing and the access points. So now these type of services have become more accessible to the people. But still, there is, I mean, there is the need to work on that, because that could really represent a very important revolution to really expand financial inclusion. Very important are also some developments in regard to e-wallets. in the graph that is presented here, of course, we see that the number of registered e-wallets have been increasing over, since 2018. But here we also see in general that the share of e-wallets held by females, it's still not as high. So also in this regard, we see some gender gap. And we need to consider that e-wallets could be also very important for refugees. So this is something, we know that Jordan has a pretty large number of hosted refugees, and therefore this is something that requires some attention. Now, if I still have a little bit of time, Mais, I would like to go through very fast through some recent developments. Okay, but I will do it really fast. In general, something that is very important and it's gaining more and more momentum is the Fintech regulatory sandbox, which was launched by the Central Bank of Jordan since 2019. And basically, it pushes the ideas of supporting innovation, financial innovation. So the central banks, they open 30-day applications windows where basically new innovations, new service provider can apply, and then it's a sort of, controlled lab to see how innovation could be developed, what is their potential. I believe it's a very, very interesting experience. Then very important, but we are still waiting for the results. During 2021, the Central Bank of Jordan has been coordinating and supervising a national level's financial inclusion diagnostic study. So I'm sure out of this study, it will be possible to develop more and more tailored recommendations, policy recommendations, and to see what is really needed to boost financial inclusion. But again, still the study has not been released, and we look forward to see it. Of course, very important is also to promote awareness for the importance of financial services. This is still something that also in our financial inclusion survey, we really show that there is the importance to spread awareness about how crucial are financial services. On the one hand, the COVID-19 crisis pointed to their importance, and I believe it promoted a very important mentality change. So people are more and more understanding how important financial services are. Still, the Central Bank of Jordan is launching a massive financial inclusion awareness campaign, 360 financial inclusion awareness campaign. And it's targeting, of course, also the most vulnerable people in the societies, refugees, females in rural areas, and so on. Yes, building on the national strategy for financial inclusion, and also fed by some results of the diagnostic studies, the authorities are launching a financial inclusion action plan, which is centered on 5 important pillars. Some of them are somehow also some weaknesses of the system, so it's very important that the targeted policy action is dedicated to it. The main pillars will be small and medium enterprises, because as we also showed through our study, small and medium enterprises are still insufficiently covered and supported by financial services, and they still have very limited access to loans and facilities, in particular in very small enterprises. Digital financial services should be definitely expanded, and the regulatory framework should be also strengthened, also to make the system more fit, more reactive to possible innovation and new developments. There is then a very important project that is being launched in regard to the Mobile Money for Resilience initiative. This is particularly linked to the necessities of having refugees being on board within the financial inclusion initiatives. So that's for sure a crucial development. And we are also glad to see it in the new Financial Inclusion Action Plan, because that was something that we pointed to in the EMENES study, in the EMENES Financial Inclusion Survey. There is this need to particularly take into consideration the needs of the refugees. Microfinance and financial consumer protections are, of course, other areas that will be targeted. Okay, that's fine. Thank you very much. I then come to the end of my presentation and I look forward to eventual questions. Thank you.
Thank you very much, Serena. I think from your talk, the improvement is clear in the case of Jordan, which is good news. So now we move to the discussants. We're honored to have Professor Claudia Girardone and Mr. Attila Yusin to discuss and share their inputs on the topic. We start with Professor Claudia, who is a professor of banking and finance at Essex Business School of the University of Essex. She's the director of Essex Finance Center, EFIC, and the director of research. She's a member of the EMANES Scientific Committee. Additionally, she was my PhD supervisor, my role model, and a very dear friend. Professor Claudia, we're very happy to see you. The floor is yours. You have about 10 minutes.
Well, thank you very much, Mais and Reem, for inviting me here. It's really a pleasure to see you all. And yes, Mais was my student, and it's great to see how far she's going now post PhD. Thanks for the opportunity to read this report, which I really enjoyed actually reading. So I have prepared a brief summary and some ideas, some thoughts about possible future research in this area. So let me share my screen here, I guess. Let's see if it works. Can you see my screen? Yes, perfect. Okay, so basically what I would like to do first is to give a brief summary, and basically what is actually I don't manage to see my my screen myself. Let me see if this one works better. Does this work fine? Yes. Okay. Sorry about that. Yeah. So financial inclusion is a very hot topic. I mean, it's been for a few years, and we know how relevant it's become, particularly in recent years, as people there are more people in poverty, and this is something that is not just for the countries that are subject of this report, but also in other countries. In fact, even here in the UK, we see that more and more people get excluded, and there's more need for a better access to finance in general. So we all know what financial inclusion is about. So it's not just transactions, payments. There's also insurance. There's also loans and savings. So basically, what we see in this report is that it's clear that in some countries there's been some progress, in some others there's been shocks, exogenous shocks, crises, in addition to the COVID. In some of them, so progress has been relatively slow, generally speaking, but in the last couple of years with the COVID, clearly there's been many new challenges. And I know, Mais, you've been working on a report specifically on that. So the structure of the study is really clear. I was quite impressed by the amount of work that went into it. So well done to everyone who was involved. I like the fact that there was a similar structure across chapters, so that it was making like potentially comparisons across countries much easy for the very easy for the reader. So you have this regulation and then description of the key things in financial inclusion. So the key factors that are availability, access, but also do people use the financial product if they have access and if it's available, or do they not? And if not, what are the barriers? So that's really, really good. And in every chapter, there is an effort to try to see what are the policies, the measures that can be carried out to improve and promote financial inclusion and access to finance. So certainly very comprehensive and useful report. And I like the fact that there was this part on the interviews. So the fact that you had also, in addition to compiling a lot of tables and charts, but also looking at the literature and going out and interviewing on doing field work. I think that was very precious to the report. And there's a lot of there's a lot of parts that identify best practice, and also for example, I saw this part that was mentioned a few times on Jordan, on the digital wallets, but also in other countries like Tunisia. And so things that can be used also in other countries are working well. And it sets out a lot of useful recommendations for policy. The role, of course, of the European Union seems to be really key here in providing support. So also trying to find ways for the European Union to potentially provide more aids, more support through, for example, a common guarantee initiative. That would be really precious, because my impression also today, trust comes up always as an important factor, trust in the system. So people who are excluded have little trust on the institutions, on the system. And so clearly that having potentially a guarantee from other countries could help. So in terms of findings, so here is in fact the need. What I see that comes up in all reports for each country, so in each chapter, is the fact that perhaps having more diversity is really important. So the fact that you have banking systems where you have only one type of bank is clearly not ideal. So having a variety of banking banks types, like commercial, savings, cooperative, also fintech, and then so basically having different business models seems to be something that could be needed in some of these financial sectors. Many of these countries rely on informal financial services, so finding ways also to address that. I'm not sure how. It's obviously empowering women would be a good start, because a lot of perhaps jobs that women do happen in the informal sector, which needs to be addressed, and trying to rebuild trust, increase transparency. And then clearly, so gender gap, but also the gaps between cities and more rural areas seems to be a common feature across all these countries, and targeting policies to trying to increase access to financial services for young people. So the other problem of the age gap, and also refugees who don't have documents. Again, it's been addressed in several papers today. So more also banks maybe don't have enough branches, they don't reach out enough. More financial education is needed. Other things that are really important, that are key to a developed financial sector that can really support financial inclusion, is the development of credit registries, and this includes also, for example, the smaller loans, so the microcredit. Finally, the use of post office networks and also mobile banking seem to be key. This is something that we found also from the UK, for example, and it apparently works really well. And so something that certainly should be pursued also in the countries in the southern Mediterranean. So for future, a few things, a few thoughts. So we talked about diversity of banking sector. I think this is something that needs to be looked at more in detail. So trying to find out what are the barriers to a more diverse banking sector. So why, where it comes from, and trying to see to what extent also a more diverse banking sector is indeed more inclusive, and so trying to make more of a case. This includes not just types of banks like commercial versus non-commercial, but also alternative sources of finance like microfinance or Islamic banks. I think Islamic banks maybe in some cultures are more welcome, which that's where there should be more. You know, it's kind of trying to understand where is the best way to increase inclusion by making sure there's more of these different types of institutions providing credit and services. Then focus separately on individual financial inclusions and firms' access to finance. I think this is something I felt reading the project. There is a lot of both, but I think in the future, it would be very useful to split the two. So once focusing on the individuals' financial inclusions, so the savings and depositing and lending to to individuals, and then versus the part on small, micro, small and medium firms, so the access to finance of businesses. I mean, it could be a good idea to look across different countries doing two separate projects because I think there are targeted actions. There are relationships, obviously, but there are different actions that can be taken to trying to improve both. Then there is the digitalization. I'm nearly finished. I've got only a few more lines. So again, digital inclusion is something that is certainly correlated with financial inclusion. And so trying to understand better these relationships and also there is one of the countries, I think it was Lebanon, that talks about the need to access to electricity. I thought, well, that's incredibly important. We're thinking about fintech and, you know, but these people don't have access to electricity. So we're going to kind of step back a moment and reflect on these things. And then, of course, the security issues when we think about fintech, people, again, linked to trust. The other thing is some of the countries in the report are actually upper middle income, according to the World Bank, and some others are lower middle income. So it would be also useful to perhaps group them separately because they have obviously different needs because of that. And last but not least, the data sometimes are a bit patchy in the sense that I can see they're taken from different sources, different years. They don't really match. So I wonder if it would be good to have only less indicators, but more homogeneous across time. So choosing a few, but that you can actually follow clearly. And then I was looking at the Findex and the Financial Access Survey. They seem to be coming up. So the Financial Access Service was released in November 2021 from the IMF, so very precious source. And then the Findex is coming out in a few months. So that will enrich for sure future narratives and on these matters. So that's it. Thank you very much. I think it's really been really a pleasure to read it, and I hope some of my comments are useful.
Thank you so much, Claudia. They're very useful and valuable comments, so will be taken into consideration for future research. Now we move to Attila, last but not least. We move to Mr. Attila Yussil, who's a policy advisor for sustainable digital financial systems at the German government's Agency for International Cooperation, GIZ. Attila has been working on financial inclusion and technology with the Arab Monetary Fund, with central banks across the Middle East and North Africa region. I know that he's been working in Jordan as well. We're looking forward to hear about your initiatives to enhance financial inclusion, Attila, and highlight the most critical areas. Attila, the floor is yours. You have about 10 minutes.
Thank you very much, Mais. Thank you, everyone. I have 3 minutes, if I'm not mistaken. So without further ado, the banking sector is not serving the societies. Microfinance institution has not yet showcased its impact. Technology, mobile money is picking up slowly. And above all, women and young people are suffering the most from financial exclusion. That's one side, or one way to see the story, right? But I don't want to be this pessimistic here. I brought 2 hypotheses with me here to this talk. And first of all, I'd like to congratulate the team here, all doctors and madams, for this really great, impressive achievement. I don't think it is on me to comment on this paper that would not do justice to the research, but I would like to share my observations to the subject matter. So my first hypothesis is that financial inclusion is important, indeed, because it is a means for sustainable economic development, right? And up to now, we have cared, especially in my case, and I'm talking here in my personal capacity as well, or primarily, we have cared about social objectives. And I read this morning, this is World Bank figures reporting that around the world, COVID and the restrictive measures have been imposed to limit the spread of COVID, pushed around 110 million people into extreme poverty in 2020 alone. That is horrible. That is indeed very horrible. It was in the same year, in 2020, that the Economists microscope studies reported that in its survey of 44 countries, there were 28 countries that relied primarily on digital financial infrastructure. And those countries were better able to support its population and society by paying out cash transfers into the accounts of people in order to reduce the social repercussions for these people in emerging markets and developing countries. So indeed, financial inclusion, digital financial inclusion has an important role for socioeconomic outcomes. But this is not only about goodwill. There's also a viable commercial interest in here, right? In the old days, we built microfinance institutions primarily as a means to fight poverty. But nowadays, we're talking about providers that fulfill a double purpose. And so there's a viable commercial interest in this huge segment of unbanked young people in the Arab countries. There was a study last year by CGAP, I'm quoting, reaching half the untapped market of individuals and businesses by 2024 in the Arab countries is estimated to bring about an additional revenue potential of $7 billion for the financial service providers alone. So this does not include the spillover effects into labor markets from additional finance. So my first hypothesis is financial inclusion is important because it is a means for sustainable economic development. My second hypothesis is financial inclusion is insufficient because it is a means for sustainable economic development. Access to finance can be solved if governments want overnight, basically. And we have seen this. I mean, governments can mandate banks to open a basic no-frill account for everyone in the country and to use those accounts to pay out government subsidies or bulk payments for social relief or other wages. Iran has done it in 2011. They had full financial inclusion. But obviously, we can see from the same case that there's other factors playing an important role for impact, right? So governance issues are important too. This brings me to my next point, which is in financial inclusion, and I am part of the community, we have made maybe a mistake for a long time that we have focused on transaction accounts only. And we know from field research, from the financial diaries, such as from Ignacio Mais, that people, especially the majority in the countries that we look at, the majority has very basic motivations to manage money on a daily basis. And that is, first of all, they care about how to smooth consumption or cash flow. Second, how to make an income tomorrow. And third, how to protect the little savings they have, right? And so they pick their financial services, if they do at all, based on these motives. And if they don't find a value in the banking services, of course, they will not trust the banking services and the banks. So we have focused maybe too much on financial accounts, and we should or need to focus more on what value does the financial service in the hands of the people, of the poor people, actually make a difference to them, to their daily lives, to the socioeconomic outcomes. So there are other factors around financial health that play an important role, and we are slowly opening, in my industry, I'm a practitioner, we are slowly opening the eyes to those factors. They are relating to impact. So in the future also, especially, more and more important will be for us all factors around adaptation, mitigation. I know that you know the figures. The climate action tracker in, I think, a UK NGO is projecting that world temperatures will increase by the end of the century by 4.5 degrees based on today's policies. If we will hit that worst case scenario, I don't know, I hope not. But it is clear that finance will play an important role on the micro level, on the daily lives of people, to help them adapt to the changing conditions because of climate change, and to help them adapt to the changing conditions in the business environment, in the policy environment, to deal with stranded assets. So my task right now is to deal with this and to find the linkages that can help us to improve financial services in this regard. So I conclude with 3 points in conclusion. First of all, so far in my industry and with the central banks that I work with and that I highly regard, we have focused on 4 policy objectives. Those have been inclusion, stability, integrity, and consumer protection. Maybe it's time to add 2 more. And I argument that those are competition and impact. First, I mean, and this is my second point, the competition, and I agree with Dr. Girardone on this, we need to open markets for competition in the countries. All my partners, my clients are primarily dealing with this. It's a huge task, but Fintech or open banking concepts, like we have seen the EU PSD2 initiative, are predestined to enhance competition by opening access to data. So hopefully, and I expect technology to exploit this market potential of the dominant banking sector in the MENA. And my last point and third is for research. I hope that research can be open from now to the future for more impact-related focus studies along the ESG spectrums. So the factors that I just mentioned here in my 3 minutes around social, environmental, and governance issues. I'd like to thank you again, Mais. It's been a pleasure to see you. Dr. Rim, thank you very much for inviting me. Sandra, thank you very much. And everyone here, thank you and congratulations again. Thank you.
Many thanks, Attila, and sorry for the time constraints. We have a few minutes for questions. If anyone has a question that would like to share. Okay, maybe I can start. So Attila, I wanted to ask you, because you mentioned Fintech and you have this huge experience in the region, so the African experience was such a success story. Why do you think that this has not really been the case for MENA region? What's the difference, or what we need to do to follow this experience.
I'm sorry, could you repeat this? I just received another call from my colleague, sorry.
Okay, yeah, I was saying about Fintech, you know, the African experience was such a success story, especially Kenya. So I don't know why in the MENA region, we didn't have such an experience. What do you think the reasons are?
Yeah, I'm very humble with answers because I don't think I know the truth or have the complete answer. But my observation is that we may have neglected in our work, and when I say we, I consider myself part central banker. I've been in the central bank. Issues around infrastructure and opening them to competition, especially in finance, but also outside of finance in related fields like technology. And today the industry boundaries they don't play an important role anymore. The industry boundaries have fallen. And so we need to find ways for markets to be open to innovators, be it startups or be it technology firms, in finance as well, and especially. I expect technology to disrupt the financial sector in the MENA. It is only a question if it will be foreign big technology firms, or if we will manage to open safe ways for the local disruptive startups. Thank you.
Thank you, Attila. I see Reem wants to ask a question.
Thank you very much, Mais, Claudia, and Attila for your feedback also on the study. And I have a question which is based on the latest digitalization trends in financial services. Of course, digitalization trends and platforms are good in general because they can eventually enhance access for a certain segment of the population, but not necessarily for everyone, particularly when we are still experiencing in the region or the target region we are studying a digital divide, particularly in terms of the rural and the urban areas where they do not have access to digital platforms. We can also see this same trend in Europe where, for example, just take the case of Spain. There has been a call by people who are not anymore getting to access financial services because of the complexity of the handling of the digital platforms, particularly people with a certain age, which are not necessarily acquainted with the complexity of the digital platforms and applications and so on and so forth. And they are now I've seen it yesterday, there were in Spain more than 600,000 signatures against this trend of digital finance and so on. So where can we put a line in reality? So what do we do? So sometimes we say, okay, digitalization is it's a great trend to enhance access. But sometimes we see that certain segments of the populations, they might be excluded or self-excluded from the system. So this is a question for you and for Claudia.
Thank you, Attila. Well, a couple of considerations. So there's two types of barriers in my view. So there is the digital divide due to the age gap. That is one, and then there is the one that there are some parts of the population that don't have the digital literacy. So that's why when I think I put it in my slide, that's why when you think about financial literacy, financial education, nowadays it has to be going together with the digital literacy, digital education, because they're kind of related so much. They're the same thing, because a lot of financial services excuse me, are now in digital form. Now, in terms of the age, and this is a problem everywhere, there's no, clearly I know that people of a certain age are, I think, are struggling, especially as public services as well are becoming more and more digitalized. And this is a real issue that the countries try to help with the short courses, again, little support they can do, but there could be more could be done. But I think it's a transition. The newer generations are much more familiar with, and so I guess yes, I think it's a matter of supporting those generations that are struggling the most and rely on their kids basically to do to use these services. I don't know if Attila, you want to add anything on that.
I fully agree with you, Claudia, and I was emphasizing heavily, maybe just to add one remark, technology, the role of technology, but in the end, and at the beginning, I always focus, and I ask my colleagues that we always shall focus on the humans, the people first. However, what technology does and what we have understood so far is it changes the underlying business economics, the foundations and the cost structure especially. And what that does is it allows the provider to micro customize and make more convenient user interface in financial services in the hands of people. Now, there's a long way to go, of course. That's not enough. I agree that it is crucial to have very basic digital skills, literacy skills, financial literacy. And we have seen in Jordan, the country I was able to learn from, that that there is a very sophisticated effort to educate children in schools. Thank you.
Okay, if there are no more questions, I think we came to the end of this interesting webinar. Can I please ask everyone to turn on their camera? We want to take a group photo, please. George, please let me know when it's done.
Sure, just need a smile. Thank you so much.
Thank you, George. Thank you very much. I would like to thank all the panelists, the discussants. It's been a pleasure to have you, and hopefully we see you in the next research debate webinar that will be announced soon. Thank you very much and goodbye.
Thank you very much, Mais and everyone. Bye.